Good morning, ladies and gentlemen. Allow me to start out with a brief story, and my apologies here to the translators because this is not in the script, on uses of meat and bone meal. For those of you who are familiar with it, meat and bone meal is one of the two primary products we renderers make, the other being the animal fats. And meat and bone meal looks somewhat like sand, only a little bit more powdery, kind of a dark brown in color, almost reddish sometimes. And at home I have 3 daughters and a wife, so I'm definitely a minority in my own household. That also explains the gray hair I have right now. And my 3 daughters are aged 22, 20, and 18, and when the oldest one of those was starting to date rather seriously, she had a boyfriend named Stephen. And I knew Stephen's father, and he knew me, and we knew each other's businesses, and we discussed it now and then, and he asked me if I'd ever told Stephen what I do for a living. And I told him no, but I would, soon. The following week, I brought home a nice big Ziploc bag of meat and bone meal and set it down on the dining room table. And no, I was not going to use it with my granola in the morning. I just wanted Stephen to see it, and he came over that evening and looked at it and said, "Mr. Kaluzny, what is that?" And I said, "Funny you should ask, Stephen. I brought that home just for you to look at. That bag right there is meat and bone meal, and that's one of the products we make in the rendering business." You know, it's really hard to imagine, but yesterday that was a 1,200-pound steer. His eyes kind of went like this, and I said to him, "Stephen, you're going to take real good care of my daughter, aren't you?" So that's just another use for meat and bone meal. Doesn't get a lot of publicity. But let me move forward here and introduce the World Renderers Organization to you. It was established back in 1999 to represent rendering around the world, not just individual companies, but more importantly, the whole idea of rendering and rendering byproducts. We serve as a vehicle for education and information exchange between countries and associations, as well as with governments and world organizations such as the WTO, the OIE, IFIF, and Codex Alimentarius. Our membership consists of over 50 countries throughout the world where rendering is established as a business, and it includes all of the EU countries. Today we're going to start with a look at the current values and pricing for rendering byproducts. We're going to take a look at how we got there with a historical perspective of today's values, and that'll lead us to looking at trends affecting current and future values. We'll relate those to food versus fuel, and then we'll take a look at population and demographics around the world, and that'll give us a prognosis on the future of pricing. In looking at current pricing, I show here the values using quoted markets from Chicago. And since I made this slide back in April, markets have gone up and they've come back down again. They're always a moving target, but they don't move that much relatively speaking. What we're looking at here is the range they trade in. And note the dollar amount here of $67 a head for cattle and $10 a head per hog for the inedible byproducts. That's important because if you think about it, 49% of every cow never makes it to the dinner table. Neither does 44% of every hog or 37% of every chicken. This is here where the market topped off at a couple of weeks ago. $51 a hundredweight for tallow, almost unheard of. $5,100, or $51 is over $1,000 a ton. Right now it's back down in the $46 to $47 a hundredweight range. What's far more telling is to look at the trending in prices for selected fats and oils over the past 5.5 to 6 years. The red line here is rapeseed, Rotterdam pricing. The green line is palm oil, Malaysia pricing. The purple line is tallow, U.S. prices. The blue line is soy oil, Decatur, U.S. prices. And the aqua-colored line is yellow grease, which is recycled restaurant frying oils. With the exception of rapeseed, you have all of the fats and oils trading at double their 2006 prices today in 2012. I don't know many stock portfolios today that are double what they were in 2009. Now, there was a drop in 2009 because there was an awful quick upgrade there in prices in 2008 due to biofuel demand. where I'd like to take this chart back to the year 2000. There's no room on this page, but if you looked at it back then, you would see tallow and yellow grease trading at only $200 a ton. What that means is we basically had an increase of doubling in prices every 5 years, going all the way back to the year 2000. Now that anomaly was caused primarily by BSE, because prior to BSE, that market was running at about the $320 a ton range. The next line here, or next slide, shows a similar pattern for protein meals. 50% meat and bone meal and 50% porcine meal, along with 48% soybean meal, have basically all shown a doubling in price in the past 6 years. Here we've gone from $200 a ton to $400 a ton. Here too, animal-based meat and bone meal and porcine meal were trading at only $60 to $100 a ton back in the year 2000. Thanks again to BSE and the reluctance of the market to use our products. Now let's look specifically at animal protein meal production in the year 2011. Total global production was estimated at over 13 million metric tons. 31% of that came from the U.S. and 30% from both the EU and South America each, with Australia and New Zealand kicking in another 8%. Now here we can see global fat production in 2011. We have fatter cows, I think, chickens and pigs in the U.S., and so we got 42% of that production of over 10 million metric tons. The EU produced 28%, while South America kicked in 23%, and Australia and New Zealand 6%. The big question is, where does all that production go? What's it being used for? Well, we can see here that the largest part goes right back to the animals themselves. They consume 35%. That goes right back into feed. Another 15% goes into pet food. We humans only consume 8%. We used to eat a lot more than that, but we've kind of cut back a little bit. Oleochemical consumes only 9% today, as it has moved away from animal fats with their higher prices, and they've substituted palm oil in place of it. Biofuels consume 10% of animal fat production. And finally, exports make up the other 22%. Now that 22%, we all trade fats and oils around the world, and that 22% is basically going into two things: feed and biofuel. We really don't have a hard number on where it goes because that number is not tracked in any way. But basically it's going to be a split between those two. And what that really means is that 10% cut you saw earlier that I talked about is really more than 10% on a global basis. Just looking here at fat usage for biodiesel in the U.S. alone for 2008 through 2011, with the exception of 2010 when tax credits expired, total consumption has moved steadily upward. And look at that, over 500,000 metric tons in 2011. Think about that. 10 years ago, that was that little sliver you used to see on all the pie charts that said other, less than 1%. Animal fat does make a really good biodiesel. Graphically, we can see the trends in use since 2005 in the U.S., where methyl esters or biodiesel have gone up every year, while the feed use of fat has gone down. And in the U.S., that's primarily because we have so many DDGs, or dried distillers grains, coming from the ethanol business. What it's done basically is replace feeding fat. DDGs just happen to be higher in fat content than corn, because basically you've taken all the starch out during the production of ethanol, and hence you need less feeding fat. However, DDG producers, the ethanol guys, they've noticed the fat markets, and they've seen what we're getting for fat these days, and they're moving to extract more of their oil from the DDGs before they sell it. So bottom line, we're going to see an uptick in feed demand for fat in the U.S. in the next year or two. And speaking of biofuels, let's look at world production of biodiesel. Everywhere one looks, the production numbers are up significantly since 2008. It's gone from a total of 13.8 million metric tons to 22.6 million metric tons. Top three producers being basically the EU, Brazil, and the United States. Now that biodiesel is made out of both animal fats and vegetable oils. This is the newest and strongest demand for animal fat to come along in decades. And come along it really has. It shows no sign of reversing direction, although it will not grow quite as fast as it has in the next 5 years, as it has in the past 5 years. But it does represent the single most significant usage of animal fats worldwide, and it's one that did not exist 10 years ago. Let me quickly show you the world stocks of 4 major vegetable oils in terms of ending stock and the corresponding stocks-to-use ratio that everyone gets so concerned about at the end of a crop year as the crop is running out of storage before the next harvest. We must remember that animal fats and vegetable oils all play in that same arena. They're all used interchangeably. In many ways, one price affects another, whether it's a vegetable oil or an animal fat price. And since 1991, ending stocks have certainly increased as production worldwide has grown. However, consumption has outstripped the production increase such that the stocks-to-use ratio has fallen from 12% to 8% left at end of year. Globally, supplies are just tighter. That drop represents a 33% decline in that ratio, and that's what gets people worried. Allow me to shift back to animal proteins again, and here we see the exports around the world by the major producers of animal proteins. We don't have final numbers for 2011 in terms of exports, but I think it's pretty easy to say and pretty safe to say that from 2005 to 2011, we've doubled exports. We've gotten over BSE as a world market, and total exports reflect that. If you look here, you got to remember that intra-EU sales are not reflected because that's considered one entity for statistical purposes. More importantly to world demand is where are those exports going? In this slide, we see 2 things primarily. One, the top 5 importers of all that protein are all in Asia. And number 2, not so readily apparent, but the most rapidly growing protein production entity in the region of Asia is aquaculture. Farmed fish and shrimp production has ballooned in the last 5 years. As the developing economies of the world move more people into the middle class, the demand for animal and fish protein increases. People who can afford it want to move from a vegetable diet to a meat diet. David Nelson referred to this yesterday in his World Synopsis on Tuesday morning when he said, "More people with more money want more meat." And I'd add fish in there too. It's estimated that over 300 million people will join the more affluent middle class in this coming decade. The GAA, or Global Aquaculture Alliance, estimates that in the next 12 to 15 years, they will have to actually see a doubling of farmed fish production to keep up with demand. Because basically ocean fishing is at its maximum right now on a sustainable basis, and the only alternative is aquaculture, or farmed fishing. Historically, farm fishing relied on fish meal as a feeding ingredient. However, one look at this comparison between fish meal prices and poultry meal and soybean meal tells the story. Fish meal production has been relatively static for the last few years, as the world's oceans can only give up so much product every year on a sustainable basis. Hence, we have world production quotas. Limited supplies and growing demands always yield higher prices. And with fish meal selling at upwards of $1,400 a ton, feeders are looking for relief. And where they're finding it is in poultry meal, feather meal, and soybean meal. All this points to continued increased demand for protein products and fats to create the diets for these fish and crustaceans. As an aside here, the renderers moved into around the world, placing money into researching uses for animal fats and proteins through the Fats and Proteins Research Foundation in the U.S., to which most of them belong. We began that research about 15 years ago when I was chairman of that organization, with projects starting in Canada, Egypt, China, and Vietnam. And that research continues today and has paid off handsomely in increased demand for our animal proteins and our fats. These next 3 slides, in going to the tallow side of the business again, show the export producers, the U.S., Canada, and Australia, and the importers of tallow over the past 5-year period. And who's buying it and who's ratcheting up production of animal feeds as a result? Here you can see China, 40% increase. The sum total of all this, though, is the usage shown here in production of animal feeds. North America and the EU split half the world's production of feed pretty evenly at 25% apiece. But Asia is the big market. They take 30% of that production today. They need feed ingredients, and they're willing to pay for it because they don't have the ability to produce all the ingredients they need. They just don't have the capacity. Putting that demand in perspective, here's another one of those ending stocks and stocks-to-use ratio charts. Here it is for 7 major vegetable and marine protein meals.
2 minutes, David.
They are all animal and fish feed ingredients. Ending stocks themselves are pretty constant over the past 2 decades. However, that ending ratio has dropped in half from 6% to 3%, despite the increase in every one of those meals. Here we see some of the usage behind that increase in demand, and China here, which cannot produce enough feed ingredients, really dominates that increase in usage in feed proteins when looked at in soybean meal equivalents. It is without a doubt the 800-pound gorilla in the room, as you can see that red line going off the chart. I might note that animal fats have a bright future in aquaculture diets too, as fish oil gets extremely expensive as well. And here the big competing demand is from the pharmaceutical industry, who wants fish oil for omega-3 capsule production. They can pay far more than a shrimp feeder can for fish oil when you see the cost of one of these little bottles. If you extrapolate it out to a metric ton, that's $900,000 a metric ton they're selling that for at retail. Pretty hard to compete with that. The animal byproduct markets have never followed meat price markets. In fact, they have always been counter-cyclical. They follow competing use markets, which we have pointed out here today, which are quite strong for the foreseeable future. Traditional uses for animal fats and protein meals are quite strong in terms of demand. And when you add the new uses for fats in biodiesel and biofuels and aquaculture, along with the new demand for proteins in aquaculture, the future looks brighter than ever. Add to that the continued usage of competing products such as corn, soybeans, palm, and rapeseed for biofuels, and you get a new level of pricing for animal byproducts. That level is in the arena of double the pricing of 5 years ago and double the pricing 5 years before that. For those of you producing meat and doing your own rendering, you know that with prices of meat the last few years, sometimes about the only part of your business making money has been the byproduct business. The future does look bright for byproducts and their values. The byproduct values suffered as the world economies expanded at record rates in the early 2000s. We were suffering from BSE. But today we are again counter-cyclical and enjoying some of the highest prices we have ever historically seen. I will not dare to give you a concrete price prediction. However, we can easily see the trends in pricing and the demand factors behind them. We are today living in an era of protein and fat prices that are over 100% better than they were 5 years ago. And we should not expect to continue anything but that otherwise. Thank you for your attention.
Thanks, David. Thanks for the impressive global view of your sector that you were able to give us, and also for the positive message. And speaking about the best use of the fifth quarter, we could not omit to discuss the world of pet food, the world of pet care, another important marketing channel for our enterprises. Angus McIntosh will speak to us about this. Angus is the commercial vice president for Mars Pet Care in Europe. Everybody knows Mars, that also in the pet food sector is one of the largest global players with a lot of famous brands. Angus knows very well our sector because in the last 6 years he has headed the procurement function for his company in Europe. Please.